Hello, friends. If you are 66 or over and still in work, or if you are approaching state pension age and wondering whether any of this applies to you before you retire, this video is specifically for you. There is a rule at the center of UK benefit eligibility that a significant number of people get wrong. And it is genuinely easy to misread. Because the word pensioner in everyday language and the term state pension age in law mean two different things. The question I see most often in comments from people aged 65 and 66 who are still employed is this: do you have to stop working before you can claim? For most of what I am covering today, the honest answer is no. The threshold is your age, not your retirement date. And because nobody makes that plain, a large number of people who already qualify are claiming nothing. We will cover 5 benefits today. And by the time we get to number 2, the one the comment section argues about most. Without anyone landing on the correct answer, you will have a clear, sourced answer to the employment question. The rule is 4 words from the Department for Work and Pensions. 4 words. That settles it. Quick context before we get into this. This video is for UK residents age 63 and over anyone at or approaching state pension age who wants to understand what that threshold actually unlocks. The goal is to explain rules that are genuinely easy to misread, so you can check your own situation without getting it wrong. Everything I share comes from publicly available official information, the Department for Work and Pensions, HMRC, the UK government's official website, and citizens' advice. This is educational content only. It is not personalized financial, tax, or legal advice, and nothing here is a promise that you will receive any specific amount of money before any major benefit or financial decision. Speak to citizens' advice or a licensed professional who knows your full situation. Now let us get into what actually matters. 5 things, in an order that builds. Before we start, are you still working past state pension age? Or do you know someone who is? Drop a yes or no in the comments. Number 5, your national insurance record and the errors that may be permanently reducing your state pension. Your state pension is based on how many qualifying years are on your national insurance record. According to the Department for Work and Pensions, you need 35 qualifying years to receive the full new state pension. And each year you fall short reduces your weekly payment by roughly 1/35 of the full rate permanently for the rest of your life, with every future triple lock increase applied to that lower base. The record is built from data submitted by your employers across your entire working life. And sometimes that data is wrong. A year you know you were in full employment shows as incomplete, self-employment years that appear missing. Contributions for women who changed their name after marriage and whose records were never properly linked. Pause this and write this down. On the UK government's official website, search. Check your national insurance record. Your full history is there, year by year, with a note against each year showing whether it counts as qualifying. If you find a year that should be full and is not, contact HMRC with whatever documentation you have. P60 forms, old pay slips, bank records showing salary deposits. The further back an error goes, the harder that paperwork becomes to locate. If you have genuine gaps rather than errors, HMRC allows you to purchase voluntary national insurance contributions for some recent years, with the cost and return per year available on the UK government's official website under Fill Gaps in Your National Insurance Record. For most eligible people, the payback period is under 3 years. Quick question: do you know your actual state pension age? Not when you plan to retire, but the legal threshold. Number 3, council tax reduction and the 3-month backdating window that resets every month you wait. Most people at state pension age in the UK pay their full council tax bill without ever checking whether a reduction applies. According to the UK government's official website, council tax reduction for pension age claimants can cover up to 100% of the bill, depending on income and savings. The pension age rules are more generous than the working age rules, and they activate from the point you reach state pension age, not from the point you stop working. Pause this and write this down. Search your local council name plus the words council tax reduction to find your area's application form. When you submit it, ask specifically about backdating. Pension age applicants can request up to 3 months of backdating without providing any reason for the delay. That means if you apply today, payments going back 3 months can be recovered. Wait another month and the earliest month is gone. The income and savings thresholds are set locally. But if you receive the guarantee credit element of pension credit, which we are covering next, you will almost certainly qualify for a full reduction. If you are not on pension credit, the application is still free and takes about 30 minutes. Have you checked your national insurance record before today? If so, let me know in the comments whether you found any unexpected gaps. Number 1. Marriage allowance and the 4-year backdating window where 1 year disappears permanently every April. If you are married or in a civil partnership and one of you has income below the personal allowance, that is £12,570 for the current tax year, per HMRC, that partner can transfer £1,260 of their unused personal allowance to the higher earner. The higher earner's tax bill reduces by £252 per year. What makes this genuinely time-sensitive is the backdating. You can claim marriage allowance going back 4 complete tax years, which means up to £1,008 as a lump sum from HMRC plus the ongoing annual reduction. HMRC estimates that over 2 million eligible couples have never claimed it. Pause this and write this down. The application is on the UK government's official website. Search Apply Marriage Allowance. It takes approximately 10 minutes and is completely free. Do not use a paid claims company. They take 30 to 50% of the refund for something you can complete yourself at no cost. The oldest tax year currently claimable will fall out of the 4-year window in April 2027. After that date, it cannot be recovered. Every year of delay costs £252 that cannot be reclaimed. If both apply to you, that application is worth completing this week. Number 4, pension credit and why. It changes the maths on at least 2 other items on this list. Pension credit is a weekly payment from the Department for Work and Pensions that tops up your income if it falls below a set threshold. As of 2024 to 2025, the guarantee credit level is £218.15 per week for a single person and £332.95 per week for a couple. Uprated annually by the DWP, if you receive pension credit guarantee credit, you almost certainly qualify for a full council tax reduction, meaning your entire council tax bill can go to zero. You also become eligible for the cold weather payment, the warm home discount, and free dental treatment. And for anyone over 75, pension credit unlocks a free TV license. Pause this and write this down. Search pension credit calculator on the UK government's official website. It takes about 5 minutes. Asks only basic questions about income and savings, and gives you an estimate. If the result is above 0, completing the full application is worth your time. Do not skip this because you assume your income is too high. Pension credit is calculated on income and savings, not employment status if your combined income falls below the threshold. You may qualify regardless of whether you are still in work. Before number 2, I want to tell you about Dorothy. Dorothy is 67 and still works 3 days a week as a pharmacy assistant in West Yorkshire. I want to be clear, Dorothy is an illustrative composite, a realistic picture of a situation that appears repeatedly in this area. Not a single documented individual case. For 2 years after her 66th birthday, Dorothy assumed that being employed meant she did not qualify for attendance allowance. She has arthritis in both hands and a heart condition that limits what she can manage at home without assistance. A neighbor had told her, years earlier, that attendance allowance was only for people who had fully retired. Dorothy believed it and never checked. Her daughter eventually looked at the Department for Work and Pensions guidance directly. The eligibility rule had nothing to do with employment. It had everything to do with age and how Dorothy's conditions affected her daily life. 2 years passed before Dorothy finally requested a claim pack. At the higher rate for 2024 to 2025, that represents over £11,000 permanently gone, not delayed, not paused, but permanently lost because of a misunderstanding that 4 words of official DWP guidance would have resolved. Number 2, attendance allowance. And here is the answer to the question this whole video was built around. 4 words from the Department for Work and Pensions state pension age. Health condition. That is the complete eligibility test. Not retirement date, not employment status, not income, not savings, not home ownership. According to the DWP, attendance allowance is a tax-free weekly payment for anyone who has reached state pension age, currently 66, and has a physical or mental health condition that means they need help with personal care or supervision. Employment has no bearing whatsoever. If you are 66, still working part-time, and you have a condition that limits what you can do at home without help, you may already qualify. The rates are set at 2 levels. The lower rate applies to those needing help either during the day or during the night. The higher rate to those needing help during both. Per the DWP, as of 2024 to 2025, the lower rate is £72.65 per week, and the higher rate is £108.55 uprated annually under the triple lock. Check the DWP's current rates on the UK government's official website before making any decision. There is no means test, no income threshold, no savings limit. The backdating rule is what makes timing matter. Attendance allowance cannot be backdated to when your condition began. It can only be backdated to the date the Department for Work and Pensions receives your request for a claim pack. Every week between now and the day you make that request is a week of payment that cannot be recovered. Pause this and write this down. On the UK government's official website, search the words attendance allowance. You will find the claim form and the full guidance for completing it. Requesting the form registers your interest date with the DWP. You then have 6 weeks to complete and return it, with payments backdated to the day you requested it. If you are unsure whether your condition meets the description, read the guidance on the official website or speak to Citizens Advice first. That service is free, and they will help you assess whether your situation qualifies, and if you do qualify, mention it when you check your pension credit position. The DWP takes disability benefits into account in that calculation. Does being in work affect attendance allowance eligibility? No. Does income affect it? No. Does owning your home affect it? No. State pension age and a qualifying health condition, that is the rule. Directly from the Department for Work and Pensions. Take one action from today's list. Start with the UK government's official website. Every benefit we covered today has a dedicated page there, and every check is free. If anything on this list applies to your situation and you are not sure how to proceed, contact Citizens Advice. It is free and they help with benefit applications. You do not have to navigate it alone. And if you have a health condition and you have passed your 66th birthday and you have never checked attendance allowance, request the claim form today. Every week you wait is a week of the payment that cannot be recovered. Which of these 5 did you not know about before watching? Tell me in the comments. If you have someone in your life still working past 66 who assumes none of this applies until they retire, share this video with them today. And if pension credit is something you have never fully understood who qualifies, how the income calculation works, and what else it unlocks, that is what the next video covers. I will see you there.